What's up, everyone? First of all, I want to congratulate Bird. Congratulations on your first day of school. A couple other announcements. I'm back in Arizona as well. Also, my first day at ASU for the semester. And if you didn't notice, this is a different time than we usually have our sessions. I'm planning on doing them at this time at least on Mondays for the rest of the time that I'm doing the sessions. And uh, I'm considering switching the time also on Tuesdays and maybe even changing up my schedule completely. So if this time works better for you guys, let me know. Or if it works worse, also let me know that. And one thing I really like about this time, at least now, until daylight savings, is that we get to see the day switch as well, which I kind of missed from our sessions a while ago. All of the OG people will remember that. Josh and Bird, especially. Throwback to um, seeing the day shift in the charts and talking about swap fees and whatnot. So we are going to be talking about that kind of stuff today. I also want to go over Fibonacci's as well as any charts that you want to let me any charts that you want me to look at. So let me know in the chat if you want to see anything in particular, and let's go ahead and get started. All right, so starting off on UCAD. Last week we were looking for the short on UCAD, and that's exactly what happened. So if you caught this, that's really great. That it worked out perfectly. It never made a new high from last time we looked at it, and it went down quite a lot. Yeah, we can look at GN as well. So overall, at least from this Doji, I don't know exactly when we're looking at it. That's 337 pips. That's last 4 days, 22 hours. So that's almost exactly where it was last time we looked at it. A little that happened a little after, but wait, you. Okay, I just want to make sure you can see my screen. So that would be really nice. I hope you caught that. If you did, congratulations. That would have been a really good trade. Would have been fairly obvious if you would have looked at it because it had really nice doji structure after a large green candle. This is on the 1 hour time frame. We see the 1 hour large green doji, and then we see the doji that has a slightly longer top wick than bottom wick. And also, we also see that the top of the top wick is slightly higher than the previous top wick. It's kind of hard to see because that blue line, I can take that off just so we can see that. So now it's a little easier to see. This candle here, slightly higher. What up, Nate? And so that's really good. All these things tell you that this definitely should be good for the short. If you would have seen this, then definitely should have taken that. It ended up working out really well. So let's continue on and go on to GN for now. As Bird wants to look at GBP and NZD. So one thing to note is I do want to definitely talk about the day shift and when that happens, swap fees and all that. I want to go over that. However, for using ICE, which is the chart, my favorite chart type, it's not going to be you're not going to see it on this single chart type. So again, if you forgot the chart types, when you type in the pair name, there's a lot of options here. ICE is the best one for almost everything except for sometimes it's an hour off. and because of that, I don't always recommend watching it. So looking at GN, let's see if we can find any sort of Fibonacci's and things of that nature. So right off the bat, I'm noticing these giant wicks right here. Looks like price went to our zone from before, broke up a little bit, but then came back down, currently below our zone as well. So this went, wow, that's huge. That's 418 pips of from wicks top to bottom. So on the bigger picture, let's zoom out just a little bit. Oh, it's already up. I didn't even notice that. So from this high to this low, our zone was put at the 382 mark, and it still looks like it's respecting that zone for now, and I could see this may have already been. It's really hard to say at this point if this already was the movement down or if that was just
he was telling me how he was sick.
a random blip.
He was telling me how he was sick.
And that's only because it came almost down exactly to this level here, which is the 236. And that does lead me to believe that this is real. In fact, also the fact that we're using ice adds more pressure to that as well. So I'm liking I'm liking this for a bit more of sideways movement, which isn't really helpful. It's not, doesn't seem to be ready to move either direction yet. There's some things that are saying it's going to move down, such as the larger time frame with we see that really nice hammer doji structure all there. No wicks, or sorry, wicks did no bodies finished above the 382, but there was 3 wicks that broke above on that daily chart. So by that, I want to say it's going down. However, this one candle here, this absolute massive one with the large high and low wick, that makes it a lot more confusing to trade, and that happened 2 days ago. So we see that it came pretty close to the 236, but also clearly broke above. And just because of that, I see this more sideways movement likely to come before it really makes its true movement. I don't see anything quite yet. If I were to do anything on it, I'd probably put on a pitchfork so we can look and see if there's any sort of pitchfork going on here. I wouldn't use this kind, so let's see if any of these could line up in the future. I was just seeing if mostly this bottom one was going to line up with anything. And it's not very nice. It's not, honestly, the original worked the best, but even that one is not very clean because it has other breakouts here. So far, I would say that GN has a little while more sideways movement to come before it makes its true move. And we'll definitely relook at it once it starts to move a little bit more. So keeping on the pound pairs, we can come back to this one too. I want to look at GJ. So for GJ, on the daily time frame, we saw this really, really nice one here. While GN 2 days ago had both up and down wicks, GJ only has a downward wick. And it's also at a PRP. In fact, I didn't even set this PRP recently. That is the, let's see, where's that from? So from this high to this low, it's backwards, I believe. Oh no, it's not. It was exactly at the golden ratio, the 618. is exactly where the body finished on that candle, and it's starting to go up. So because that was such a very clean textbook finish, and we see the very, very nice daily dragonfly on GJ from 2 days ago, I don't see this going any direction but up. It should continue at least for one more candle, one more daily candle. So tomorrow as well. Today's about to finish. It's almost for sure going to finish green because it's already fairly large. Tomorrow should be another green day as well. I could potentially see a bounce happening off this level here. That is the level to look for. There should definitely be, at least on the 1 hour time frame. We can go on to the 1 hour. There should definitely be at least some sort of resistance once it comes up there. When it starts to approach, it's going to approach pretty soon. It's extremely likely it will at least test that. So that's another 55 pips. Some people like to do those really short trades like that. I don't recommend you do these necessarily. These would be chasing trades because it's already been moving up, but I do see it continuing to go up as well, at least to there. I don't see that being a long-term bounce point. What I think is very likely to happen is it will break it by just a little bit. It'll break this blue line by a little bit, maybe go up to halfway in between the green and the blue, around that area, with just a wick on the 1 hour, and then it will come down a little bit more, and it'll try to convince everyone it's going down, but then once it's convincing enough, then we'll move upwards. That's what I think will happen. I can draw that with arrows to make it a little bit easier to understand what I'm talking about. So I'm talking about just a little bit of a break and coming back down, and then continuing up after that. And because this was a daily time frame that we're looking at for this, it should have daily time frame results or longer term results as well. So I'm looking for this to be potentially the low for a very long time. I'm talking maybe breaking this as the high, breaking this trend line, which is a piercing trend line, breaking that piercing trend line, continuing up even higher. I see that as a very likely thing to happen. So we want to look for long-term ideal buy entries, which again, on the 1 hour chart, we just saw that this might be a decent time to entry. However, I do not think it's going to be the best time. I do think that it's eventually going to go lower than it is now. But I do see this being a very long-term upward sensation from this chart. So really, where I'm looking for, it's too soon to call it for a buy yet. It's not quite ready yet for a buy. Like I was saying, don't want to chase it. However, let's see what you can do for getting a nice entry. I don't think it'll be this low of a downward tracing, by the way. I think this will be much lower. I just put that as a placeholder. What you can do once it is done, once it does come up here, we can use this as an arbitrary zone. Then you can use fibs, and it should at least come down to the 382, but more likely it'll come down to the 0.5 at least as well. Were you trying to input something there? No, okay. Yeah, so this is a trade I like. This is something to be watching. Like I said, it's not quite ready yet, and I would not recommend getting down. I would not recommend selling once it does reach this level either. because that would be counter to the long-term movement that we see. It's not counter long-term trend. Long-term trend is going down. However, this is a fairly clear sign on the day that of a daily reversal pattern. So it should be a pretty nice long-term reversal. And then again, this is more for people that like to hold trades for excess of even a week at least, because I see this coming down, coming way up. All right, so let's look at at least one more pair. Can someone give me a pair to look at in the chat, please? I'll just take the first one. NCAD. Let's look at NCAD. NZDCAD. So we're going to look at ICE as usual. So let's start on the daily time frame and work our way down. And let's start from a fresh chart. And we can look at GCAD as well. So for NCAD, NZDCAD, one thing, the thing that catches my eye right away is this horizontal line that happened recently, right there. Missed it by a little bit. So again, if you're new to my sessions, I use blue as PRP, price reversal points. I use orange for entries for buys or sells. I use red for stop losses or stop profits, green for take profits, and grays for notifications, prices that you want to set your alerts for. So on this price reversal point here, I do notice it's a little bit off, but that's, especially in this time frame, it's fine to be that. It looks like it's maybe 3 pips off or less. It's a really strong PRP. Let me highlight just a couple of the points that I'm seeing. Obviously, this one that's most recent. And then I'm going to turn on drawing tools. So there's all these bounces that I'm seeing. Even that one, this one's pretty close. It's not perfect. That was a really bad circle. And that's enough. So for again, keep in mind, daily time frame, long term. This one's bugging me because it's so ugly. I'm gonna redo that one. Daily time frame, to have this many points hit a single PRP means it's very strong. So I am looking, especially since that was, do I trade on the daily? I definitely look on the daily for sure. And I sometimes set limits on the daily, but I wouldn't necessarily enter a trade off of the daily. So what did we see? We saw a large red candle and then a very large doji after that on the daily. So what are we looking for? Well, we still haven't seen upward movement yet, and it still hasn't broken the low. So until it breaks this low and makes a new low, breaking the PRP, again, very unlikely, this is good for the buy, a continuation of NCAD for the upside. So let's now go on to smaller time frames, but we want to look only for the buy entry. And now all the circles look really bad because that's what happens when you switch from daily to 4 hour. So again, on the 4 hour as well, look how small that body is on that doji. Very small. That adds confluence. We saw at least 2 different time frames, very small bodies. There's 4 hours starting to finish the same exact place, almost the same exact place, not exact, but very close to being the same place. So this is something you definitely want to pay attention to. I see that it already looks like it's beginning to become ready for the buy. And let's throw a fib up on just that single candle using the same candle for the high and the low. What do we see? So far, it has come back down to 236. And the wicks have broken on the 4-hour, but it most recently failed to touch, almost touched though. So that means potentially this may be the lowest 4-hour candle. It's likely that the next one or the one after that, one of the next two 4-hour candles, meaning the next 8 hours, we'll see the low for NCAD, and it likely won't have an even lower low than that for quite a while. Let's look at the fun side of this. Let's see where, let's say it is going to turn, as it looks like it is. And this, I can never find a good place for this. Okay, so let's find a good place for where our take profit would be if we are going to trade this long term. So we saw at least two confirmations of this being a reversal. We want to look for a buy, and our buy entry is going to be at 236 level right there. So let's mark that up with an orange line. And so where would our take profit be? Well, that was just for entry. However, for our take profit, we want to include the full top to bottom movement. So from this top to bottom, now our 618 level is up here. That is the second algo target. So that's a very likely place that we want to take profit right before, not after, and also not at. A lot of the times, price will come right up to, but not quite hitting on your broker, especially if you have some sort of premium account, anything but ECN on your broker, then a lot of times you'll purposely miss these key levels just so you can't quite get out in profit, and then it will turn down after that. So this would be our entry. Our stop loss would be right below, making a new low, because that's unlikely. We don't want to see that. Like this, just below. This will have to be, you want to look not on this chart, but on your actual MT4, whatever you trade off of on that chart, your broker's chart. Use slightly below their number, because it might be slightly different than this number. And you definitely want it below and not at or above that level. So it can be barely, even just 1-2 pips is fine. That's going to be for just original stop loss. Ideally, once this moves up even just to the 0.5 here, then we want to move our stop loss to a stop profit, not risking anything, and still have the potential gain to reach all the way up here. So let's mark this out in a long position. Let's say that it's going to happen next 4-hour. Let's see what our ratio looks like. So first of all, our ratio is 8.84 to 1, meaning that if you took 8 trades that were similar to this one and you lost 8 of them, or sorry, if you lost 7 of them and you won 1 of them, then you would be in profit. So that's good. It just has to happen once out of 8. I'd say this has more than a 1 in 8 chance of happening. So therefore, this should be a good trade. I don't necessarily know that it will come down to test this level again. It might be worth it just to place it now and have a little bit more of a stop. But let's look and see how far our stop currently is from price. So right now, from current price, it's 70 pips away. However, from our entry used here, it's about 55. Now that may not seem like it's a big difference, but let's look at how the ratio changes as we move just those little bit of a difference from 55 to 70 pips of potential stop loss, and also decreasing our reward target. So again, right now, I'm looking at this number right here, risk reward ratio, 8.84, and then we move it up to current price. Now it's 7.73. So that That's still really good. That's definitely still a good trade. It's not that big of a difference, but look how small the movement was on the chart. That's versus entering here versus there. Price did already, in fact, hit that level. So either way, both of them look like they're decent entries. However, I wouldn't necessarily want to enter right now before this hour finishes, because something very special, which I hinted at earlier, is gonna happen in 2 minutes from now. Who is familiar with what is gonna happen in 2 minutes?
Agent.
What was that?
Agent session?
Can you repeat that question, please?
Yeah, I was asking, do you know what's going to happen in 1 minute 30 seconds from now? Yes, the market close, the swap. That was the answer I was looking for. So right now, if you're on your computer, if you're on your phone, don't worry about this. You can just take my word for it. If you're on your computer, pull out your phone, go on to MetaTrader 4 or 5, whatever you like to use. Go on to the quotes section and find either one you're interested in trading or one you're in right now. It doesn't really matter. I'm going to look at NCAD. Spread will go up. Yes, spread should go up in a minute from now. So I'm going to look at NCAD. Let me see where that is on here. I'm looking at my phone right now for that one. NCAD. Okay, and then once you find the one you want to look at, you click on details, and you look at the bottom, at least on my screen it's at the bottom, it says swap long and swap short. So what that means is, for me, it says 2.8 for swap long, and swap short is negative 10.5. What that means is, in 10 seconds from now, if you're holding a trade, you will get that amount of money per standard lot that you are using. So here's the thing, though, is whenever that happens, it just did. We see it's a new day, new candle. I took off the day thing, so we can't tell. Okay, well now this is in the way. On the new day, new dotted line, we almost always see this. The direction that the swap was the worst for, again, it was positive 2.8 to the upside, and it was negative 10.50 for my broker for the downside. It does sometimes differ from broker to broker. However, it was positive for one direction, negative for the other one. What almost always happens is right when the day change happens, right after, we see price move in towards the negative section. And the reason why is, let's think about this. So everyone was waiting until the new day, because once the new day happened, then you no longer have to pay that. So why would I enter right before and get that additional, it's only $10, but per standard, which still is, it's not that much, but it's something. So some people care about it. I don't recommend you do this, but it is something to note. It's noteworthy. When right after 3 o'clock local time hits, when the new day, you don't have to pay to swap for a whole 24 hours. You get to hold that pair for up to 24 hours without paying a single swap. Whereas if you would have held this pair from before, you would have had to pay that $10, and then you wouldn't have been happy, except for price move almost always moves towards the direction. Does everyone understand why it usually goes towards the worst direction on swap? The worst deal? Want me to go into that more? Is everyone understanding that? Let me know in the chat.
Is it because the brokers are nickel and diamond to make money?
Close. So it's more about the consumers. The consumers don't want to pay the larger swap fee. So a lot of them do is they wait till the new day, and then they can have the direction of the negative swap fee, the negative direction, but for free from swap. So they don't even have to pay the swap at all because they waited a whole extra minute or however long from when they originally wanted to enter on the downside.
Gotcha.
Cool. All right, so that's something that I want to look at, maybe even tomorrow. So I'm wondering. I originally had my session at this time for because of this new day change. I'm thinking about switching my Tuesday session as well to this session. Does everyone like when I go over the swap and the new day, so we can look at the new day kind of stuff? Does everyone like that more, or should I leave the Tuesday session as it has been from 1:30 to 2:30? I can do either way. So whatever is better for everyone. Just let me know either in the chat or in my DM me if anyone has any preference. Either way. But if not, I want to look at the other pairs that were suggested from earlier. So I want to look at GCAD. All right, so for GCAD, let's see what's going on. If we mark it up from, so we have two different options for the low. We can use this as the low or this. This one's a lot more recent, but this one's a little bit lower. And the difference isn't very big, so I'm going to start off by using this one as low, and if nothing seems to be lining up, then we're going to switch to the other one. Now for the top, it's a lot more obvious. You would, of course, be wanting to use this one as the top for the most recent move. So again, we see that large. I'm going to delete the blue dotted lines again so we can see the chart a little more clear. We see that one candle 2 days ago, again, where it has the large wicks. So what this is telling me is it's on so many pairs that it's taking a while for basically everyone to accumulate enough to be able to be ready to have the real rally. And it looks like, I think it's either, I think it's buying the pound. Yeah, everyone wants to move it that way. So we should see a lot of the pound pairs moving up pretty soon. Another thing I'm seeing immediately on this one is PRP. Right there as well. Really, really similar, really close to each other. This combined with the large candle from before, this is telling me that maybe it's already ready to move. I could see a third test or maybe even a third break before the final move, but it's pretty likely it would just move up now as well. So let's mark up this pair as well and see how it looks. So our entry we look for, let's put it right there. That's a little before this PRP, but which, by the way, it's not just those two right there. It's also this body finish, this wick finish, this wick finish. Quite a lot of levels in there. So I'm putting the orange line there for entry. Stop loss, again, you'd want to have just below the wick here. And oh yeah, this is something I wanted to cover. I told Bert about this before, but I don't think I told everyone else about this. It's different when you are in a buy position from a sell position for when stops hit. So when you are buying, the price you see is the price that will take you out of a stop. So that's why we can put the stop loss so close to the real bottom of this and be just barely below, and that's still good. We could not do the same thing if, let's say, price was up here. We wanted our stop loss just above this point. We could not put our stop right above there. Who knows why we couldn't do that, why that would not work.
Let's see.
Wouldn't it be because of the price? Like the price would hit it before?
Sorry, can you say that one more time? The price would what?
The price would touch it before, like the spread?
That's exactly right, because of the spread. So when you're in a sell position, you do not get out of stops at the price shown. It's actually a price a little above the price shown. So in that case, if price were to say come back up here and bounce off the exact same level because it's a PRP, let's say it respected that PRP, you would still be taken out even if it bounced off, and we don't want that. We want to have it be able to bounce off that very last level if possible. So if we were looking for a stop loss right above this, then we want to put it a little above. I can't give you a solid number of exactly how many pips above because it depends on the chart. For example, if you were looking at...
Depends on the spread, right?
Depends on the spread. The spread and the chart.
Or the pip differential.
Yeah, or the ATR, the average true range. A lot of things like that is all comes into the factors of how high above. You can kind of eyeball it a little bit, or you can look at when spread is at its worst, which is around the new day. So right now, I saw spread earlier was at 11 pips. It's unlikely that when it comes up to this level or this level, for our example, spread will be that high, but I like to measure out if it was that high plus 2 pips. Now I see it being 12. So let's say, so I would mark up 12 and then add 2. So looking for 14.4 or so. That's almost exactly where I put it. So now at this level, considerably above where the real high is, that is where I put the stop for a sell limit. Now, if you are not in the US, you have a big advantage because you don't have to use MetaTrader 4. There are other platforms out there, one of which is CTrader. CTrader is a really great platform. I wish I had access to it, but there is no, they don't offer their services to US clients or US brokers. So we're not, if you're in the US, you're not able to get that one. One advantage of CTrader, the platform, is that you are able to set it where the buy price for a stop loss has to break a certain level. And that would be really helpful because in that case, you actually could put the price right there and it'd be perfect. You wouldn't have to waste a couple extra pips of potential loss. So going back to our actual trade, we would want our trade just barely below the low. And again, you want to look at your actual data on your chart. Don't use the level, the exact numbers I have here. So how far down is that from this level? That's quite a ways. That is 122 pips stop loss. And that's not something that you want to use normal leverage for. You want to use far less leverage for this trade. It does not at all mean this is a bad trade whatsoever. It just means that this pair tends to move faster than a lot of other pairs that we like to look at. So I might still take this trade, even though I have 122 pip stop loss, that I might use half, 1/3, 1/4 of the amount of leverage that I would normally use on maybe like a GU pair, on GU trade or EU trade, which we're going to look at EU pretty soon as well. So that's very relevant. So let's say we want to have this trade. We want to have our stop loss here, our entry here. Where would we want to be taking out? Well, again, because of this daily doji off the large red candle, we would want to look for our take profit way up here. However, we don't want to use this low as the low. We want to use this as the low, and we want to look at the 618 for the, it's not even there. There we go. We want to use the 618 for that level, for our takeout. Again, just below. So for this trade, this would be a very long-term trade, probably longer than most people like to hold their trades. And I think that's one of the keys for trading, in my opinion, is holding long-term. So if we were to hold this all the way till up here versus all the way down here, this is a very similar risk-reward ratio. I'm not sure if these numbers are accurate because this looked lower on the daily. Okay, it is. So this is very similar to the last pair we looked at in terms of risk-reward ratio. On this one, risk-reward ratio is at 7.67. So really decent, even though it has that much of a potential stop loss. Again, just have to adjust how much risk you're using. You have to use less leverage than you normally use to fit the stop loss. So, all right, we like this trade. Both of these are good. I want to move on to the next one that was one to look at, which was gold. So gold, XAU USD, which, by the way, if you're not familiar with chemistry, you don't know the symbols, the reason why it's XAU for the beginning is it's just the letter X. That just means pretty much commodities. A lot of commodities start with the letter X. And then AU is the chemistry sign for gold. And that's another way you can remember it if you forget what the three-letter composition is for that. And then USD because it's being compared to the US dollar instead of any other form of currency. So it looks like we were looking for the short before and it didn't work out so well. Let's just delete everything, get a new chart going on gold. So let's test and see if this is a potential high. So how we do that is we mark from the bottom to where it is, and then we look on previous data. I like to look on the 1 hour time frame. On the 1 hour time frame, if it fits, yeah, that fits, okay. Including a lot of data, a lot more farther back than it really is. What we're looking for is bounces off of these key Fibonacci levels in previous data. And this is called future fibs. It's actually, I don't know if other people use this. I actually found this myself, and it works out really well in my experience to know if you actually have a true top or if it's just a likely fake. So again, we do not count that top and we don't count the bottom either. But any other hits, such as this one right here, these do count. So we see really nice bounces off of the Fibonacci's in previous data before it even had that level. And so far, that one was really clean, but I'm not seeing a lot of other super clean ones. I'm seeing some decent ones, like where the body's finished here is pretty decent. And then this is really clean here. So just going through the data, not seeing a ton. That could be considered one as well. There's a wick. Oh, what happened? There it is. There's a wick that touched the top there and then came down and immediately broke it after. That's still something that you'd want to look for. Still does count. This isn't the best example. This is a really good example of something that doesn't work out so well. I'm not seeing that many circles. I'm seeing maybe 5 circles. I'm not sure how many I made, but there's not that many. And because of that, I don't necessarily like this for the top. I do see this continuing to go up even farther because there's not so many of them. So I'm going to delete everything again and just make a new Fibonacci. One. Move the other way. And then, and I'm going to find a point higher than this point, must be higher, not lower, of where at least potentially there's a lot of hits on it. So I was aiming for this one to hit. And then now I'm going to check and see if there's a lot of other places that same level hits. And now this is an arbitrary level in the future, which we'll then see if it actually could be a very relevant point after we look at it a little farther. So let's see. I'm immediately seeing really good point right here. Even though I was targeting this point, it still definitely counts. So we want to look at that one as well. And then I see the bottom wick of a candle right there. I'm using a very large monitor, so I can zoom in on any of these if people aren't able to see them. Just let me know.
Would that be a teacup?
Would it be a teacup? So if we zoom out, which we can't zoom out anymore in the 1 hour, if we go into the 4 hour, we can see that it wouldn't be quite a teacup unless it came a little higher up. Also, I don't usually trade off of teacups necessarily because it's a little hard to see exactly where the top is unless it's a double top or something like that. So one obvious location of a teacup is where it just makes an equal high to a previous one. However, if it doesn't, then it's hard to say if it's still a teacup or not. And because of that, it's not super concrete. Therefore, I don't like to trade teacups as much as other ways of trading. Just not my personal style.
Gotcha.
So I don't need to highlight all of them, but there's a lot of points to this arbitrary level has not been hit yet. So what I suspect is potentially, we definitely want to look at it. Do not take this trade. Instead, I'm going to make this trade really quick, and then I'm going to tell you what to do after. But if we go here, this color didn't change correctly. So we'll be looking for a sell up here. However, you don't want to put a limit here. And the reason why is price hasn't even come relatively even close to this point yet. Instead, what we'd want to do is we want to set another line just below the actual level that we think is going to happen. Well, actually, it's not necessarily always below. It's always closer to current price. So if price was currently higher than the place we want to look at, it'd be reverse. And I'm gonna change this to gray, and you probably see where this is going. I like to use skinny lines because it's not a real point on the chart. It's just something where I can visually see my alerts. So then I go to the alerts, and then I gotta make sure that I don't have any right now. I'm using my free account right now, so I'm going to delete this one. Which is about GJ. So now, when creating an alert, I want to tell myself what to do in the future once price hits that level. So what I would say is look for gold sell, and then I would say why. Future fib, and then what else? Lots of confirmations, and I would say what would confirm that this is indeed actually a top. Well, I would want to see something maybe like a Doji, or I'd give myself instructions. Take trade if Doji on 1 hour, 4 hour, or daily. So now, now we have that alert, it'll be sent to my email when and if price comes up to this level here. And then that way, once that happens, if I'm awake, which hopefully I will be, then I will look at the chart, and if price does make a 1 hour doji, 4 hour doji, something like that, some sort of more confirmation, then and only then it would be good for the trade. I think it's really important to let yourself know what you are seeing now in the future, your future self, what you're seeing now, and then also what to look for as at least one more confirmation, so you can have at least one more thing to even confirm or deny your trade, just to make sure your winning percentage will be higher if you do that, essentially. Now, when I was placing the stop loss, I did put it a little bit randomly. However, I was eyeballing a couple key things. So one is you don't want to have it too far away. This is pretty far away right now. This is 254 pips away. That's a lot. So maybe we don't want it that far away. And instead, since we like this level so much as an absolute high, again, it has to be an absolute high, we could even have a very small stop loss. But again, this is something that you want to look at, excuse me, look at and adjust when and if price does come up to this level. Not something you want to set ahead of time. Again, you do not want to put in a sell limit for a stop loss, because based off future fibs, because you want to check it once it actually happens for further confirmations. And then someone earlier, Philip, wanted to also look at euro, so we'll also look at euro. Oops. I touched with the whole word. And then ICE. Okay, what is happening with the euro? So I was watching euro a lot yesterday, and it was doing some crazy things over at the beginning. It was a little unusual in the movement pattern. It ended up going straight up right away, and that can be seen. Can't see it now. It's in the way.
Can you explain why you used ICE?
Yeah. So ICE is the most accurate chart formation for most things. Not necessarily. Let's see if it works for this one. Okay. Sometimes it doesn't work for the new day change. It's a little confusing because sometimes it does, sometimes it doesn't. Other than that, ICE is almost always the best. It's just the most accurate to the real interbank market. This is the most accurate one you can look at. However, your broker on your phone, I don't know which broker you're using, could be Hugo, LFX, whatever it is. It should be slightly different than this chart. They're all a little bit different. Just for comparison, I can show maybe like the FXCM one, for example. Looks really different. For example, on ICE, there's a really small candle up here.
There was that gap. That was the only thing that was really like confusing.
Yeah, it's pretty different.
Like I wouldn't like, how would you chart that up with that gap being there?
With this gap.
Yeah.
So this is the year change, I believe. No?
So would that mean that gap would have to be fulfilled?
Oh, maybe not. Would that gap have to be filled? So this gap happened on New Year's Day, I believe. Wait, why is it? I don't know. So because it was, I don't think we weren't able to trade during this time. Therefore, it is bank made, and therefore it only bank made is what I mean to say. And because of that, it actually becomes more relevant, and we do want to see it. We do want to see it filled. Because it had such a long delay to fill it, or not super long, but a very decent amount of time to fill this gap. And the gap is a decent size. Let's see. Oops. Let's see how big this gap is first. The gap is about 90 pips big. We do want to see it filled, but when it's filled, it's very unlikely that it will stop there. So when and if this gap fills, it should break upwards by a significant amount compared to the drawdown before the gap. So the drawdown before this gap, we see price went all the way down to here from here. It's so squished. Let me zoom in a little bit. Price went from here all the way down to here before filling the gap, while only partially filling it. And because of that, we want price to at least come that much above the level. So how we do that is you get the normal trend line, not the extended, and you go like this. Again, I'm measuring from where price opened after the gap to the farthest distance, and you take that and you add it to the top of the gap. Now this is a strategy that not many people know about. I don't have a name for it. I didn't come up with it, but I don't use it that often, and it tends to work out pretty well though. So I think that's at the top. Let me get a little more perfect. Okay. So, and then what we do there is we just mark it with a line, not a skinny gray one. For this one, since it's a different line, I'm gonna use purple. I don't have a color for this. And then we can go ahead and delete that trend line because the trend line itself is useless. It's just for measuring. So now what we want to do, this level up here seems arbitrary at this point. However, I probably should have deleted everything before I did that. Let me just delete some stuff first to clean up the chart. So we can use that level for a future fib. We can say from down here to up here, it's the likely area where a future fib will be. And it doesn't have to be perfect. It can be off by a little bit, which we would then just move the future fib to correct it more, and that would be the actual top. So right now, I could see, this is, again, keep in mind, this is long-term. It does not need to fill right now. In fact, it looks like it won't fill right now. It looks like it'll come down first and then move up. But once it moves up, it should move up to here before having serious resistance. And I'm not seeing a ton of areas where the future fib lines up. Yeah, it's not looking the best right where it is. I do like that level, but that's pretty much it. So I might want to move it around a little bit and see if there's a better location for this. It's a little lower. It can be lower or higher. We just want it to be relatively close to it.
So basically you take your future fibs from the bottom of structure to where you're currently targeting.
Right. Of course, it can also be the reverse. It can also be from the top, depending on which one was more recent.
Gotcha.
So this level, first of all, I don't like the euro. If you've been on my session before, you'd know that the euro loves to do really random things. It's what a lot of people trade when they're newer. And it doesn't follow, not because of that, but it also doesn't tend to follow strict technical analysis as much as other pairs. But a lot of people like to trade it because they see it's the most traded. And a lot of people will say like, oh, it's the most traded, there's probably a reason why. A lot of people, most of those people that do trade it end up losing money though on the euro. So already off the bat, I don't suggest really trading the euro so much. I know some people really like this one a lot. I know that Sunil loves the euro and he's really good at it. He's definitely been profitable with it. There's definitely exceptions to the rule I just said. He's also not a new trader. But overall, I'm not loving where it is right now. I do see price overall coming up here. This general zone. I wasn't able to find a really strong future fib point. This point that I put at seems okay, but it's not great. I was basing it off of this low, and then I saw something else. This high here as well.